Hello traders, today is June the 20th. My name is Neville Hornsey. I'm a market analyst with YouTrading, and today I'll be looking at the week ahead. Now, the economic calendar is a lot sort of quieter compared to previous weeks, so we'll talk about that in a second. Just going to the YouTrading.com for its heat map. We're looking at the bottom left-hand corner turning green, top right-hand corner turning red in the London session, so more of a risk on start for this week. Looking at the Australian dollar, it is the strongest currency. US dollar is the weakest, so maybe going long Aussie versus US dollar is the way to go today. Looking at the active trader platform, if we go to the US dollar index and then just look at the price action there, we can see that on the 13th of May, we had a swing high form. Then on the 13th of June and 14th of June, we pushed up, closed above that swing high, and then we failed to sort of carry on going long in the sort of bull momentum. We have seen the 15th and 16th of June, more bearish action come in, and then we've been sort of compressing within the price action of the 16th of June, with the 15th of June's low acting as resistance on Friday at 17th of June. So as this price action compresses, looking to see weakness come in, looking for the US dollar index to roll over based on what's happening within the yields. If we were to break below the 103 spot 195, that then leads us all the way down to possibly testing the 101, this swing low here from the 30th of May, which then opens up, move down to this balance area from March. Sort of like the whole of March sort of went sideways, and then we've got the 200 period moving average here sort of rising up to meet us. So if we do break lower, I'm expecting the US dollar to come down, look for value. We have been rising quite expeditiously since the Fed started raising rates. Obviously, we're just waiting now to see what the US dollar does. Going back to the Forex economic calendar, we can see that the US is actually on bank holiday today. So they've had an extended weekend. We are expecting the US session to be low volume, low liquidity, which means the spreads widen, which then means stops can be sort of triggered. So volatility can come in, especially as we've got ECB President Lagarde speaking twice today. And then we've got FOMC member Bullard speaking. So possibly the euro versus the US dollar will, sort of see some volatility based on the sort of widening of the spreads, low volume. What we are seeing also is the 16th of June price action is sort of bookending everything that happened since. So Friday here, 17th of June, and then today's price action within the 1.06 down to the 1.038. If we were to break higher today, get back up above 1.06, then we look to the left, we've got this daily low here from the 8th of June, possibly acting as resistance. That's within this range here from the sort of May into June. If we were to get through that, get back above the 1.07, above the 1.08, then we're looking to sort of sweep the sort of swing highs here and then possibly test the 200 period moving average that's coming down through the 1.1. So ultimately, if the US dollar is rolling over, euro versus US dollar is the main component of that index, looking for the euro versus US dollar to go higher, maybe to come up and test the 200 period moving average and possibly the 1.1. Obviously, if that all fails, see the euro versus US dollar come down, take out relatively equal lows here around the 1.035, 1.036. If we get through that, then that opens up the 1.02. Now, the RSI did have positive divergence back here in April into May, and we didn't see the price action come lower, but we are seeing the RSI sort of ticking up, looking to see if we can get back above the 50, sort of show that the momentum is to the upside. Going back into the economic calendar, Tuesday, we've got RBA Governor Lowe speaking ahead of the monetary policy meetings minutes from the RBA. Obviously, they surprised to the upside with their rate hikes, looking to sort of see if they can cap inflation, get back down to 2% there. Obviously, as inflation goes higher, retail spending is going to come lower. So they're going to be talking about all of that. So we'll learn whether or not they're going to be looking to raise rates in the future. Looking at the Australian dollar versus US dollar, like I said, we are expecting that to go higher today. See if we can break above the 17th of June high around the 0.705. If that happens, get back above the swing high from the 16th of June. Then we are looking for a higher high, higher low sort of scenario. See if we can push up towards a 0.72. And again, this 200 period moving average. So 200 period moving average could be a target this week, especially if the US dollar does roll over. Staying on Tuesday, we've got Canadian retail sales. The core itself is likely to drop down to 0.5% from 2.4%, whereas the retail sales month over month may be pushing up to 0.8 from 0. The CAD itself is more likely to move on the back of the energy prices. 3 p.m, you've got US existing home sales likely to drop from 5.6 million down to 5.4 as rates go higher, mortgage rates go higher, possibly sort of seeing a squash on the existing home sales and any other sort of home data. Moving into Wednesday, we've got UK CPI year over year. Bank of England expects to see inflation rising up to double digits by the end of the year, looking for just a slight tick up to 9.1% from 9%. The pound versus US dollar, like other US crosses, trading within the range from the 16th of June, looking to see if we can get back up at the 1.2406. Last week, the Bank of England raised by 25 basis points, so hardly a very hawkish rate hike. But if we were to see the US dollar drop, then that gives the pound versus US dollar a boost. If we do get back up at the 1.2406, then we've got 1.25, 1.26, this range here from May into June, acting as resistance. We need to get back above that range, back above 1.27 and the relatively equal highs. Then we've got an imbalance here from end of April into beginning of May. So that imbalance there, we could cut through that quite easily, get to this level here around the 1.301. And that's also, again, the 200-period moving average. So all in all, looking for the RSI to continue showing positive divergence to price action. Momentum, get the RSI back above 50 at some point, especially if we get back above the 1.24, and then looking for retracement of this downtrend back up to test this dynamic resistance. Staying with Wednesday, CAD CPI month over month, common CPI year over year, median CPI year over year, trimmed CPI year over year, lots of inflation data for the Canadian dollar, looking for all of that to rise slightly. Obviously, like I said, if energy prices were to go higher, then Canadian dollar is likely to go higher. Now, the dollar versus the CAD pushed up into this area here around the 12th of May, which I thought might be sort of like a supply zone, but we did actually spike through, took out any liquidity, any stops just above that high from 12th of May, looking now to see if we come back down, test the 16th of June's high. If that acts as support, then we go again. But yeah, when we sort of see a push higher, we should have gone short really on the 17th of June on the sort of failure to sort of stick above that 1.307. Obviously, US dollar versus the CAD could potentially be coming lower based on what we're seeing in the dollar index. Again, we're looking for a pullback then towards 1.27 and this sort of flattening 200-period moving average. RSI again gave us a negative divergence between price action and this oscillator. So again, potentially momentum being signals as stalling out. If we were to close back above the 1.31, then I'm sure that RSI will be back above here. And then we're looking for a continuation to the upside. Now, for that to happen, we need energy prices to come down. And if we look at Brent, we have broken out of this rising channel, looking again for those to come lower down towards the 95 and this 200-period moving average. We could potentially rise up, test the 113 to 114, and maybe even the sort of back end of this rising channel, sort of this trend line, see if that acts as resistance and then pull back down. Would be good to see, well, if we've got a lack of demand, it means the economies around the world are slowing, and which is what in the intention, I guess, of the central banks is. If the economies are slowing, then we don't need as much fuel, and we are going to see these prices come lower, which will drag inflation lower as well. So if that happens, the central banks have done their job and everything can go back to normal, hopefully, in the future. Now, UK CPI rose on the back of Ofgem, sort of the cap in energy prices being lifted. We could see that happen again, which in terms of like energy prices in the UK almost doubling in some places, then that's why we're going to see inflation rising there. What we are also going to see on Wednesday is the US dollar being affected by the Fed Chair Powell testimony. Fed Chair Powell is speaking at the semi-annual monetary policy in front of the Senate Banking Committee in Washington, D.C. Everything that needs to be said probably gets said on June the 22nd, so on Wednesday, but there is also an opportunity on Thursday, the 23rd, for Chair Powell to sort of say more. However, from previous experience, I'd say that if there is to be volatility based on what Chair Powell says, it happens on Wednesday and not really on Thursday. What we do have to worry about on Thursday, though, is flash PMIs. So we've got French, German, UK, and US flash PMIs. So we've got manufacturing PMIs and services PMIs. Generally, we're expecting to see these PMIs drop So here we've got German flash manufacturing looking likely to drop from 54.8 down to 54. Anything above 50 is expansionary, so it's actually relatively good. It's just a shame that we're sort of seeing a slowdown. Obviously, we've got the war in Ukraine. We've got supply chain disruptions from China. And if we look to the US flash services PMI, this is the only one that is expected to actually rise. So everything else is expected to drop. We've also got unemployment claims from the US likely to drop. They're looking for a 2,000 sort of move lower, which would be good. And then we've got, like I said, Fed Chair Powell speaking again, and we've also got the bank holiday for New Zealand. So looking for UK, Euro, and US dollar to move on the back of these flash readings. These are the first readings that we get to sort of see which way the market is expecting to see the manufacturing PMIs go. Friday, June the 24th, retail sales in the UK very much likely to drop into negative territory. We've also got European sort of information coming from Germany's IFO business climate, looking likely to drop a little bit there. Then we've got FOMC member Bullard speaking, and then we've got a revised University of Michigan consumer sentiment. Now, if we did hear from Fed Chair Powell at the FOMC saying that, the FOMC were looking at the University of Michigan data points, obviously consumer sentiment. We want to see sentiment. Well, ideally, we'd like to see consumer sentiment rising, but the Fed themselves are actually looking for demand to be destroyed. So if consumer sentiment was to drop, that would probably please the Fed, to be honest. If we see inflation expectations drop from the University of Michigan as well, then that would also please the Fed. Right, so that's kind of the week ahead. I think Thursday is probably going to be the sort of biggest move for the euro and the US dollar and maybe the UK. But with the Fed Chair Powell speaking on Wednesday, maybe a lot of the volatility happens after that. Right, good luck this week, and I'll speak to you again tomorrow.